Hello, welcome back to Miner Network. I'm with the legend Rick Rule, the co-founder of Battle Bank and founder of Rule Investment Media. Rick, good to be with you.
Thank you. Pleasure to be with you.
Look, really big day yesterday. Obviously, we had the inauguration. Some pretty big executive actions taken on the first day. I don't think it quite got up to the 100 that people were predicting on day one, but a lot of emphasis on tariffs, a lot of emphasis on inflation emergency and drill baby drill, which is obviously a term we hear a lot about in mining, but he was obviously talking about oil. What was your takeaway from what you saw yesterday?
Well, I would ask investors to understand that pronouncements are not the same as policy. Attempting to get done everything that he would like to get done is going to be more political and involve much more process than he and perhaps some voters would prefer. So understand that what you saw yesterday was an intensely political event. I think it's useful in the sense that he was elected, and there is some element of the population uh, that approves of the broad direction of a Trump presidency. But I would suggest, first of all, he's a politician. So you know he's lying when his lips are moving. And the second thing is that what he would prefer to do is, in some circumstances, going to be politically difficult. There are some broad trends which I think are frankly helpful to extractive industries, both oil and gas and mining. There are some other things which, if he pulled them off, I think would be extraordinarily harmful. But I'm happy to go through them as best I can. If you,
Yeah, I think that would be good. Obviously, I think maybe we can start with the positives. Obviously, it seems like he's deregulating the environmental agencies quite a lot, and I think that's a big plus if you're trying to get a mine permitted. Obviously, if the drill baby drill thing works, that should reduce energy prices, bringing OPEXs down a bit, right? Is that the main things that you're looking at as positives, or is there more to it?
the key advantage, I think, is that the non-judicial obstacles to extractive industries will go away. The Biden administration had at best a go slow regulatory regime, which meant that you couldn't do it. They didn't tell you no, but they wouldn't tell you yes. And so there was a de facto as opposed to de jure um, objection to, as an example, oil and gas transmission, the construction of new liquefied natural gas plants on the U.S. Gulf Coast and the U.S. East Coast. And then there was also the executive action, which had the function of being de jure, although it didn't pass the legislature, prohibitions on things like the Ambler Access Road in Alaska. Before your audience gets too enamored of deregulation in the United States, remember that we have a tripartite regulatory system, federal, state, and local. So if you're looking for reduced regulatory burden in the United States, look to the four states that support resource development. Look to Texas, look to Wyoming, look to Alaska, look to Nevada. If you're in the oil and gas business, perhaps look to Oklahoma and New Mexico too. If you're looking at the other 44 states, understand that local and state house opposition still exists. If you're looking, as an example, at finding a solution to the resolution deposit in Arizona, for those listeners of you who don't know, this is a 1.2 billion ton copper deposit at 1.5% copper, three times the average mine grade worldwide. It's been in permitting 26 years. There is nothing that President Trump can do to remove local and state opposition to this deposit. So people who are looking at a defanged regulatory regime in the United States with regards to extractive industries need to understand the tripartite nature of regulation in the US. The big beneficiaries, I think, will be both the Canadian and the US oil and gas business, because I think that the de facto regulatory exemption to large scale transmission projects, pipeline projects, is over.
Yeah, obviously, I want to move on to some of the negatives of Trump, but obviously, you just brought up Canada there. Obviously, he's touted a 25% tariff on Canada. I mean, that doesn't sound too good for them, does it?
Not going to happen. I mean, American voters are legendarily stupid, but they're not dumb enough to understand that tariffs aren't taxes. I think that Mr. Trump is speaking to some parts of his base, in particular, lower skilled, elderly Caucasian workers in heavy industry who would like to be protected, and who feel threatened and angry. Uh, the true U.S. supply chain is too intermingled with the rest of the world. If these Trump tariffs became reality, then American manufacturing would have substantially higher input costs and become even less competitive, against countries like China and Mexico, who are direct competitors who didn't compete. The suggestion, as an example, also that Trump is going to put tariffs on gold. Gold is fungible. If you put tariffs on Canadian gold, no problem. They'll sell it in Shanghai, they'll sell it in London, they'll sell it in Rotterdam. And the same thing with uranium. You'll recall that the United States prohibited Russian uranium, except in certain circumstances, because of the war, and our imports of Russian uranium doubled. So understand that there's a lot more sound and fury than reality in the tariff proposals.
Yeah, no, agreed. Look, there's a lot that we want to talk about today. Obviously, I want to talk about the mining equities and the lag that we're seeing there, and the metal prices, especially in the base metal side, not performing as well as some of us would probably hope. But I guess in terms of the negative repercussions that you were mentioning earlier of Trump, I'd assume a lot of this is going to be to do with inflation, right? And the debt trap that they're in. Would that be fair?
Yeah, I think irrespective of administration, I was cognizant and able to do arithmetic during the first Trump presidency, and I wouldn't describe him as an inflation fighter. Uh, Politicians get elected by doing favors for certain constituencies and punishing other constituencies. But the truth is that assuming that the prior Trump tax cuts stay in place, which it would appear that they will do, and assuming that Trump's track record from his first term in office with regards to government expenditures continues, which is to say that they increase, uh, the outlook for inflation uh, is really very, very bad. We can go through the arithmetic at some point in time if you would like to. But the proposals, the suggestion that in a Trump presidency you will reduce government expenditures based on his track record are completely fallacious. The, the sense that the Department of Government Efficiency is headed by a guy who has received billions of dollars of subsidies, Elon Musk, is laughable in its face. I would urge any of your listeners who hold out hope for the Department of Government Efficiency to read a wonderful book by David Stockman called The Triumph of Politics. David Stockman was the director of the Office of Management and Budget in the Reagan presidency. Reagan, unlike Mr. Trump, had an overwhelming electoral mandate to make government smaller. He didn't win by an eyelash, he won by a mile. And in the book, The Triumph of Politics, David Stockman describes the total derailment of the Reagan Revolution. With 120 days of Reagan taking office, there was bipartisan attacks, Republicans and Democrats in Congress, against getting rid of all their pet programs.
Does, does this time around not seem a bit more organised to you? That I know you well, obviously we were talking at the beginning. It seemed like a bit of a display in terms of what happened yesterday. It was quite boisterous and I think intended to make a statement. But do you not think that Trump appears to be a bit of more of a man on a mission, that he's thinking a bit more about his legacy and generally wants to get some of these things done?
The good thing about Trump is he doesn't have to run for re-election, uh, so perhaps he's got nothing to lose. I don't think he has a way to win. Let me give you some arithmetic, Peter, that I'm not sure that Mr. Trump has paid attention to. The on balance sheet liabilities of the US government, which is to say the debts of the US government to bondholders, now exceed $36 trillion. For reference, that's 120% of GDP. But that's not the real problem. The real problem is the net present value of off balance sheet liabilities. That is the entitlement promises that we've made to Americans. Federal government pensions, which are promised but unfunded, military pensions, which are promised but unfunded, the Environmental Trust Fund, which is promised but unfunded, Medicare, Medicaid, and Social Security, all of which have been promised but unfunded. The Congressional Budget Office, not some cranky old libertarian named Rick Rule, but rather the Congressional Budget Office, suggests that the net present value of unfunded promises in the United States exceeds $100 trillion. So let's add together the unfunded promises and the on balance sheet liabilities. You got $136 trillion. Now let's take off $6 trillion for the Fed's own holdings of treasuries. You have $130 trillion in net debt. Two problems here. That number, again according to the Congressional Budget Office, grows by $5 trillion a year. That $5 trillion is the equivalent of the gross revenues of the federal government on an annual basis before they pay any of the expenses. But it gets worse. The Internal Revenue Service suggests that the aggregate net worth, private net worth of Americans, not the value of government assets, but the private net worth of Americans, is $141 trillion. So the arithmetic exercise for Mr. Trump is to take the aggregate net worth of all Americans, including himself, which is $141 trillion, and subtract the net indebtedness, which is $130 million. The number that he would get if he did the arithmetic correctly is $11 trillion. The $11 trillion would fund 2 years of deficit. Now, I'm interested in how he plans to attack that. I mean, I can tell you what I think will happen. What I think will happen is that politically they will honor the nominal value of their obligations. Some old geezer like me will get the promised nominal value of his or her Social Security, but they'll inflate away the net present value just the way they did in the decade of the 70s. According to the Office of Management and Budget, in the period 1970 to 1980, this is a government number, the purchasing power of the US dollar fell in excess of 75%. So they were able to honor the nominal value because taxes weren't indexed to inflation, while they inflated away the net present value. And I think that's precisely what happens in the next 10 or 15 years.
Yeah, and look, I think that fits the current theme of obviously currency devaluation, or in terms of the purchasing power of currencies at the moment. And there's a lot of people that argue, obviously, that the gold price isn't really going up; it's the value of the dollar which is going down, right?
Uh, And I think that's accurate. There are a whole bunch of people who have narrative arguments around what I just said. And I'm neutral as to the narrative. I don't care. That's not what I do. I'm not a sociologist. But the arithmetic is really hard to deal with.
I wouldn't mind asking you a bit more about that arithmetic in terms of the 100 trillion that's not on the balance sheet, sort of unbalanced debt. What does that consist of exactly?
The government made actuarial assumptions about what the costs associated with Medicare, Medicaid, Social Security, military pensions, and federal pensions, assuming they're indexed to the CPI stated rate of inflation, an understated metric. They looked at the demographics of the United States. They looked at the smaller number of young workers relative to the growing number of aging workers, and they calculated the liabilities out over 30 years. And they calculated, too, the contribution from the existing young labor force. Uh, Not all of this is the fault of current politicians. Many people don't realize that when Franklin Delano Roosevelt instituted Social Security, this was meant to cover Americans at age 65 in relatively modest circumstance for the rest of their adult life. The average life expectancy of an American male when Social Security started was 66 years. So the obligation was 1 year. The average life expectancy of an American male now is a little over 80 years. And they brought down the eligibility requirement from Social Security to 65 to 62, and they included disability. So the obligation is much broader, while the demographics of the United States has changed. At the time that Social Security was enacted, there were 4 working Americans for 1 retired American. Those numbers are in some danger of reversing. So you can see the problems with the arithmetic.
So in terms of that 100 trillion number, that's forward looking 30 years in terms of obligations that we have due to Medicare and or the US have due to Medicare.
Correct.
Right.
Correct.
Okay.
The Social Security Trust Fund, remember that this was sold fraudulently, by the way, as insurance. And the contributions of workers, ever since the program was enacted, was put into a trust fund. The problem with that is that the trust fund was invested in 30-year treasuries, very low yielding obligations. Most of the net present value of those trust funds was inflated away in the 60s and 70s and 80s. And the money that was raised from the sales of the treasuries was used to fund operating deficits of the federal government. It's sort of as though you borrowed from your retirement account to go drinking, and you replaced it with an IOU, a promise to pay. So when people argue correctly that they paid in and they need to get paid, I sort of say, yes, I agree, I'm sympathetic, but the money's gone.
Okay, so other than printing more money to deal with this, is there any other way out of it?
None that I can think of. The big thinkers, Kamala Harris and Joe Biden and Bernie, have joined this chorus now saying, tax the billionaires. The problem with that, again, is arithmetic. The IRS suggests, Internal Revenue Service, for people outside the United States who don't know that alphabet agency, the IRS suggests that the aggregate net wealth of America's billionaires is $5.6 trillion. If rather than raise their taxes, you simply stole all their money, which is probably what Bernie would prefer, you would fund the deficit for a year. And then there'd be no money left over. Tax the billionaires is purely the politics of envy. It has nothing to do whatsoever with arithmetic.
So just to get this clear in terms of arithmetic, obviously, if you look at Donald Trump's first term in office, I think I've got the figures here. So 2016, I think he was at a total deficit of around 0.6 trillion, and that gradually went up to around 1 trillion by 2019. Then we had a big blowout, obviously, in 2020 because of the pandemic with 3.3. Even if Trump can get it back down, say Elon, and I know a lot of people are very critical of this, and including yourself in terms of Doge, but say, for example, they can slash 2 trillion. So they can get it back down to where it was throughout his first presidency.
Sure.
You're essentially saying, well, that doesn't even matter because the amount of obligations coming through down the pipeline is going to blow this all way out of proportion.
Yeah, and if you look at President Trump's support, a lot of it's old white people. Uh, I look at his ability to cut Social Security, Medicare, and Medicaid, and I would suggest it's nil. Nil. So let's say, just for fun, I don't believe it's true, by the way, but let's say, just for fun, that he's able to cut the operating deficit of the US government in half, take it from 2.5 trillion to 1.25 trillion. But he has to leave untouched the deficit with regards to the net present value of unfunded liabilities, 2.5 trillion. Then rather than being 5 trillion upside down annually, he's only 3.5 trillion upside down annually. And he still has not touched the 29 trillion net on balance sheet liability, and he hasn't touched the $100 trillion off balance sheet liability. Nor, by the way, has he addressed unfunded liabilities at the state level. Look at Illinois if you want to see a real mess, worse than the federal government, or at the local level.
The obviously one of the things that he would say is, well, we're not only just going to reduce our operating cost as a country, we're also going to be essentially taxing other countries to help bring in additional revenue. He's setting up a new department to fund this as well, or to collect this revenue source. We spoke very briefly at the beginning about this. Obviously, you were saying with Canada or Mexico, it's not going to happen, but obviously he has done this in the past with China.
It's the American consumer that pays for this. I mean, everybody needs to understand that. The idea that China pays is wrong. What happens is that prices at Walmart go up. It's not as though the Chinese eat this out of their operating margin.
But in terms of the deficit, he could eat into that. But what it would do is, again, just really increase inflation within the US.
Correct. And by the way, the Democrats would do no different. I don't want people to imply that I'm pro Democrat. I mean, in fairness, I'm anti Trump and I was anti Harris. But let's get that out of the way. I'm just talking about arithmetic. I don't want to get buried in a discussion with your viewers about narrative or values.
No, 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 of course.
I'm narrative neutral. I'm just talking about arithmetic. And by the way, I'm also not pessimistic long term. The United States really is an amazing society. We're still a society where, for whatever reason, some of the best and the brightest from around the world want to come.
Yeah.
Trump apparently doesn't like that anymore either, but that's a different question. Uh, Despite, you know, 250, 300,000 people around the world compete for 80,000 HB1 visas, which is a wonderful thing. And we're still a society where 5 or 6 pimply faced kids can commandeer a garage in Sunnyvale, California, and out pops Facebook, and out pops Apple, and out pops Nvidia. Fantastic. We've managed to come this far, Peter, because our individual tenacity and creativity has funded our collective stupidity. And I believe that after a reckoning, where we inflate away most of the net present value of our obligations, if we don't kill the golden goose, and I think in this sense Trump is helpful, I don't think that Trump will exacerbate the politics of envy. I think he'll encourage individual initiative. I believe that in the United States, there is still a core belief in individual creativity and individual tenacity. And I hope that we keep importing the best and the brightest of the world from places like Taiwan, and that those people continue to contribute companies like NVIDIA.
No, and thing is, I think it's important that we just had that discussion over the last 20 minutes or so, just on that outlook for Trump, because I think a lot of what so the equations that you're making there, I think do add up. But not only that, I think that gives investors or people looking at this a bit of a sense as to what that means for the price of the US dollar, inflation, potentially what that will then have an impact on in interest rates, and then we can start actually applying that to, okay, well, how does the mining industry, how does the metals market, how do equities potentially look as a consequence of what might be to come? And I guess that's really what we should be talking about next. I mean, you've spoken before about this lag behind with metal markets and mining equities. Perhaps we can have a chat about that. Are you optimistic that that may change in 2025?
Yeah, maybe not 2025, but over the next couple of years, I think to be sure. I think in the first instance, the lag in the gold markets is easy to explain. Gold has gone up because central banks have bought gold, and they don't buy mining shares. I mean, this one's really simple. You know, they're related markets, but the buying class has been different. If you look at the flow of funds in retail ETFs, gold ETFs, for 48 months, there's been only 7 or 8 months that had positive retail flows. The buyers of gold have been foreign central banks, and they don't buy gold. There's a different problem, of course, and that has been the corporate performance of gold companies, particularly in the period 2000 to 2010, where the gold price went up sevenfold and the free cash flow per shares fell. It took real skill to screw up an environment where the selling price of your product went up sevenfold. And so there's an expectation of failure around generalist investors. I think that the remaining institutional investors in particular are holding the gold company managements to much higher standards. It has been less evident because at the same time that the gold price went up, the cost of some inputs around gold mining has increased. And so you haven't seen the margin expansion that you would have hoped until the last 6 months. But now you are seeing some of the more efficient producers, in particular the producers that have maintained their sustaining capital costs, Lundin Gold, Agnico Eagle, Alamos, as an example. You've seen in the last 2 quarters some gold mining companies that haven't merely beat expectations, they've obliterated them. And I think that continues. You're seeing actually very good free cash flow generation in the gold mining industry. And if this performance keeps up, and if the gold price keeps going up, I'm constructive with regards to both. My suspicion is that you're going to see some of the delta, the historic delta, between the gold price and the prices of gold equities. I also believe that because of U.S. debt and deficits and the necessity, from my view, of inflating away the net present value of those obligations, that the gold price, although it's performed very well for the last 25 years, will perform better. I drew your listeners' attention to the decade of the 70s, when the US dollar purchasing power declined in excess of 75%. It's worthy to note that the gold price went up 30-fold. I'm not suggesting that we're going to have a 30-fold escalation in the gold price, but I am suggesting that the pace of increase that we've seen in the gold price will accelerate as the pace of purchasing power deterioration of the US dollar accelerates. And I think that will draw attention to gold. One more little piece of arithmetic, if I might. I realize arithmetic makes a boring show.
No.
It's useful for your listeners. Gold is way, way, way under-owned, Peter, historically. J.P. Morgan Chase tells us that the market share of precious metals and precious metals securities in the U.S. market is less than 0.5%, which is to say less than 0.5% of total U.S. savings and investment assets are comprised of precious metals and precious metals related securities. Although J.P. Morgan doesn't have data going back 40 years, they estimate that the mean market share of precious metals and precious metals related equities is 2%. So if interest in the stuff merely reverted to mean, demand increases fourfold. I'm not smart enough to tell you what that would do to price. I have no earthly idea. But one would suggest that a fourfold increase in demand, at least on the precious metals side, if not the precious metals equity side, where supply growth is fairly constrained, would have a very outsized impact on price.
How do you look at it? Obviously, because like you were saying earlier, a lot of this price volatility with gold and this upward trajectory over the last few years has really been behind central banks. How do you view countries like Turkey, like Russia, like China, who have predominantly been the main purchasers of gold over the last few years? Have you had a think about sort of what their relationship to the metal is and how long that might go on for?
Uh, I think their relationship to the metal was partly defensive and partly arithmetic. The attempt by the US government to weaponize the SWIFT banking system, which wasn't our property, it was global property, and to use it to impose extraterritorially US policy preferences on other countries didn't go unnoticed by other countries. But I think the straw that broke the camel's back was when the US government stole $300 billion in Russian assets. I'm not suggesting, by the way, that I support Russia's actions in the Ukraine. What I'm trying to say is that the Russians bought $300 billion worth of US treasuries, a friendly act, perhaps in their interest, not in ours, and then we stole the assets. Now, if you were a country who thought that some of your policies might become anathematic to Americans, let's say you were Chinese or Iranian or Saudi or South African, there were two very good lessons there. Uh, Having control of the world's reserve currency and then weaponizing it for the extraterritorial imposition of your political will is not a way to build your franchise. And uh, I have been told, and I won't tell you by who, but I used to sell, as you may know, to sovereign wealth funds earlier in my career. I have been told when I asked this one person whether they trusted us, he said, "Oh, no, but we trust you more than we trust each other," which is to say, the US dollar is the worst currency in the world, with the sole exception of every other currency on the planet. The Russians don't like us, but they actually like us better than the Chinese. The Chinese don't like us, but they actually like us better than the Russians. And the Iranians don't like either of us, either of them. You follow what I'm saying? So the US dollar maintains itself as the medium of exchange among fiat currencies because they don't want each other's currencies. There isn't enough liquidity and there isn't enough underpinning. And now they can't use the US dollar as a settlement mechanism for everything because they're afraid the US government will steal their assets. A second problem is that the governments, I think, see the deteriorating purchasing power that they would enjoy in US dollars. If you believe federal government statistics, that they would measure the deterioration of the purchasing power of the US dollar by the CPI. And that number, I think, is 2.6%. If that number were real, it wouldn't be so problematic. But I would ask your listeners who are American to look at the period 2020 to 2025 and think about the price of the basket of goods and services that they consume: the price of gasoline, the price of groceries, the price of rent, the price of mortgages, the price of healthcare, the price of health insurance. John Williams, who publishes Shadow Stats, says if you measured U.S. inflation using the metrics that the government itself used in the decade of the 1970s, that price inflation in the United States would be at 12%. The number I use, informally looking at my own, basket of goods and services, is the deterioration of the purchasing power of my currency is at about 7.5%. So if you're a foreign holder of U.S. treasuries, then the arithmetic becomes I'm getting paid 4.5% a year in a currency where the purchasing power is declining by 7.5% per year. In other words, I'm losing 3% a year in purchasing power. If I give the US government $1 billion for 10 years, 35% on a compound basis of my purchasing power is gone at the end of 10 years. And they probably use the principle to subjugate me. not a particularly good trade.
Worrying as well when that is the best, or the, like you were saying, the least dirty shirt, and that's the best that there is out there. That's
Yep.
sort of says something about where we are. I guess going back onto the mining equity side, obviously you were talking about some really exceptional quarterly results from the likes of Lundin, Agnico, etc. Obviously, they're mining producers. That everyone's been talking about sort of operating costs for a few years now since we saw that big spike in inflation during the pandemic. Seems like some of these have sort of got it under control and started winning. But something that we haven't really seen, I don't know how long for now. I mean, it's such a long time, but we haven't really seen an appreciation for the exploration development side of this industry. Have you got any thoughts on how, I guess the way that there is a bit more excitement in that space?
I think there should be. And let's talk about that. First of all, the last 2 years have been pretty good to me in that space. It's been a stock picker's market. If you look at the performance of the overall market, it's been dismal, and it should have been. I think if you merged every public junior in the world, there's maybe what, 3,000 of them, 2,500, 3,000. So let's say you merge the Australian ones and the AIM ones and the Canadian ones and the American ones, and you have one great big company now called Junior Explorer Co. That company in a good year would lose $2 billion. In a bad year, to lose $5 billion. So what would the market pay for this? Would you pay 8 times losses? No, what's the rate price loss ratio? That obscures the fact that in a universe of 2,500 of the lame, the halt, and the blind, that maybe 10% of the issuers generate so much utility that they add legitimacy and sometimes even luster to a sector that loses between $2 and $5 billion a year. You have to separate the wheat from the chaff. And there is actually an increasingly large number of good people in the sector. And while the performance of the sector is dismal, the performance of names like, G Mining, Snowline, I mean, I could name 50 of them that have done superbly well.
Could I ask you what are you said that you've done extremely well in the last 2 years? Could I ask you what companies that you've sort of found that have performed best for you?
Well, I had the good fortune of taking a very, very, very large cut at the Lundin companies, which I've been doing for 40 years. So Philo, NGEX, those were my leading performers. And mercifully, they were also large components of the account. But the recoveries in names like Altius, certainly Snowfield, certainly G Mining, where I took a very, very large cut. There have been a lot of names that worked. There are also some names that haven't worked, but they've added an awful lot of value, if not price. I'm thinking about names like Sovereign, Meteoric, Centaurus, companies that have made what appear to be tier one discoveries in out of favor commodities and out of favor places. This sector, unknown or unliked tier one deposits, has been the most prolific sector for me for 40 years. Buying what you think, and there's a lot of problem defining tier one deposits. I would define it as a deposit with well over 10 billion US dollars in at current prices in situ recoverable reserves and resources, where the deposit would be in the best cost quartile worldwide in its commodity category, while simultaneously being in the best return on capital employed quartile worldwide, but at least a 25% return on capital employed. In the names I mentioned, because they're in, let's say, nickel or platinum and palladium, or they're in rare earths, or they're in rutile and graphite, because they're not in glamorous commodities, because they're in Brazil, because they're in Malawi, the market hasn't paid attention to these. I wouldn't be surprised if the whole group of them enjoyed tenfold returns over 5 years. This isn't recognized in the market because the market as a whole hasn't recognized some of the values that have been created in the sector. But I would suggest to you that the last 5 years has seen a lot of value creation that hasn't been recognized by the market because the value destruction by the market as a whole has obscured the value creation that's being done in a very, very, very small subset of the market. And I think that's very bullish.
No, I agree. Look, I think we're running out of time. I know you're a busy guy. I guess I'd love to have you back on sometime because there's loads of questions I have around the relationship between critical minerals and China, and you've just mentioned a load of critical minerals there that are very underappreciated at the moment. I guess if we could spend just a minute or two on that. I mean, you look, obviously a lot of them have different reasons. Obviously, you look at nickel and you look at the oversupply from Indonesia. You look at things like rare earths, and you see that sort of absolute powerhouse that is China and Inner Mongolia within China, where they're producing a phenomenal amount of NdPr, for example. You can sort of see why, but this relationship towards China dominating a lot of these critical minerals, and I guess its relationship to the West. How much does that concern you? Obviously, it's a big talking point. I guess just for a minute or two, if you have any thoughts on it, that would be really fascinating.
Yeah, I mean these minerals are fungible. If they don't sell them to us, they'll sell them to the Indians, and then the Indians will sell them to us, just like the Indians did with Russian oil. Two, the costs of producing, in particular, rare earths in China are increasing fairly rapidly. The very low costs were due to very, very, very broadly spread environmental devastation. The Chinese citizenry and the Chinese government is tolerating less of this. So one of the secrets that you don't hear about in the West too much is that the Chinese are proceeding in fits and starts to what we might call California standards. And that means that the enormous cost advantages that the Chinese currently have disappear. This will take 5 years. That's fine, but people need to understand that. And people do need to understand that these materials are fungible. Will there be severe dislocations in the next 5 years? That absolutely could happen. If we do something really stupid to the Chinese, which seems likely, it's entirely possible that the Chinese countermeasures are equally stupid. Remember that these policies are promulgated by politicians. So I hate I hate to go on using P's, but the probability that politicians do something absolutely stupid is very high. We'll get through it. I personally would be, and I am, speculating on rare earths domiciled in other parts of the world. I get that. I'm doing that. I believe that the extraordinary expansion of low-cost nickel laterites in the Philippines and Indonesia, I think those prices will go up for the same reason. The environmental destruction in southern Sulawesi from laterite nickel is disgusting. It's absolutely disgusting. Nobody's going to confuse me with Greta Thunberg, but it's absolutely disgusting. And it's also very energy intensive. So I think that pricing normalcy is going to return to the nickel market. These are 5-year trends. And I would caution your listeners that when they invest correctly in 5-year narratives or 7-year narratives, that they not employ 3-month tactics. If you're investing in an outcome that will take 5 years to occur, but you have trauma holding stock over a long weekend, the probability that you enjoy the correct result is very, very low. People need to understand that.
Funny you say that because obviously you've got a ranking system that looks at stocks. I think is it via Sprott or is it via investment media? I've done it a few times over the years.
Yeah, anybody who wants to, and I encourage your listeners to do it, can go to Rule Investment Media, my website, and if you list your natural resource portfolio, I'll rank it for free. No cost, no obligation. I've done this now, I'm told, almost 100,000 times in 10 years. And I've learned a lot. By the way, if your listeners want to take me up on it, Please no crypto. Please no pot stocks. Please no tech stocks. Just natural resources.
Yeah.
Leave an old codger to do what he does well.
How does that work in a way in terms of this ranking system? Obviously, people can go on, they can submit their portfolio. I think from memory, when I did it a few years ago, or maybe last year, I think you sent me back a ranking system of the different stocks, and you actually had a bit of an explanation as to
Yeah,
why you like that
I
type.
rank them 1 to 10, one being best, 10 being worst. We could talk at length about the ranking criteria. We don't have time today. Uh, I'll comment on individual issues if I think my comments have value.
When you're doing this ranking system, I guess the one thing there, just linking back to what you were saying earlier, is do you have this 3 year, 5 year time horizon when you're doing the ranking system, or is this really a snapshot in time?
Absolutely. Absolutely. I mean, if there is a near term catalyst, which is rare, obviously the ranking goes up. I need to say that the ranking system is biased to my own preference. Uh, I am very experienced and I work very hard. So I don't put in a lot of risk for volatility because I've become immune to volatility. I've been doing this for 50 years. The ranking is proprietary, so people need to understand that it's a guideline and they need to superimpose their own preferences and their own prejudices to it.
Yeah. Well, for nothing else, I would strongly recommend, even just if it's for fun, because I really enjoyed getting my rankings back last year. And it can make you feel like a genius or an idiot sometimes reading your feedback on some of this stuff. So even for that, go on Raw Investment Media and check that out. But Rick, I know you're a busy guy. You're at VRIC and you've got other meetings to go to today, so I'll let you go. But really, really appreciate you coming onto the show and hope we can have another chat sometime in the
My
future.
pleasure. I'd welcome this discussion again whenever it suits you.
Amazing. Rick, thank you.
Thank you.